All right, welcome back. As you can see, that Tajudeen Ibrahim, the Director of Research and Strategy at Chapel Hill, Denham, joins me from Lagos virtually. Good morning to you, Mr. Ibrahim, and thank you for joining us.
Good morning. Thank you for having me on the show today.
Okay, so let's get started. We're talking about FX issues, FX supply issues, and the capital importation data that was just released by the NBS. I would like you to explain, the concept of capital importation. What does capital importation mean? First, let's start from there. Let's assume we're in an economics class, because we shouldn't
Okay, so
also assume that people understand what we are saying.
yes, capital importation is when countries outside of one domiciled country brings in money in form of investment, and such money in form of investment is for them to look for investment opportunities across various sectors of the economy. So the economy we are talking about in this case is Nigeria, and it could be in form of investment. It could be in other forms being, for instance, debt. For example, when we have um, borrowings, by companies in Nigeria, for instance, from other companies abroad. So it is still a flow of capital or a flow of money from such a country outside of Nigeria into Nigeria for investment purposes or for the purposes of debt obligation and so on. So those are the sort of breakdown of capital importation and what it really means. It largely speaking is a reflection of the level of investment from other countries into one's country of domicile.
Hmm. Does that is that investment equals to confidence?
So the investment, largely speaking, should reflect, confidence, and that is why, in many cases, you will see different level of capital importation being reported by countries across the world. Naturally speaking, you would see foreign investors, go to countries where they are confident that if they invest in such a country, they will be able to number one, to be able to run their businesses, seamlessly. Number two, they will see some level of protection, largely from the part of the government. They will also feel secured, and that is a very important element when we are, looking at foreign investors and what they are willing to do in any country. Countries where there are no confidence, where the confidence level of foreign investor is low, would naturally speaking record relatively low level of capital importation because investors that could go in there to invest are not confident, or their confidence level about such a country is low. And security is a major element for consideration when we talk about investors' confidence in going to other countries to invest.
Okay, I will come back to the issue of confidence later, and what we need to do perhaps to drive that confidence up. But let's quickly break down the data that was released by the NBS for quarter one of this year. If we have a bit of that, guys, we can put that on the screen. But Tajudeen, help our viewers understand what that data actually means.
Okay, so the set of data released by the National Bureau of Statistics, there are key messages that I believe are in those data sets. Number one, our capital importation fell by 28% year on year to $1.13 billion in the first quarter of this year. But if we consider the level of the capital importation relative to the final quarter of last year, there was growth of around 6%, or let me say 6.78% relative to the level at the last quarter of last year. Another key element, that one has to take away is we have the capital importation broken down into into three elements in terms of the type. Number one, we have the foreign portfolio investment, which in the first quarter accounted for 57% of the total capital, inflow. Number two, we have the foreign direct investment, which was 39% of the total capital that flew into the country in the first quarter. The final leg of it is others, which represented only 4% of capital importation in the first quarter. And if we take a destination, if we take a look at it from a source of inflow standpoint, we recognize that Nigeria imports capital from 116 countries across the world. Nevertheless, we have only 5 countries representing 78% of the total capital imported over the period under review. And the first country is the United Kingdom, followed by South Africa, and that is followed by Singapore, the US, and also the United Arab Emirates. UK in particular stands out because 52% of the total capital imported into Nigeria over the period under review came from the United Kingdom. In terms of destination, the largest beneficiary in Nigeria is Lagos State, that had 68% of the total capital that flew into Nigeria in the first quarter. And we have FCT accounting for around 31%. So those are largely speaking, the key takeaways from the data set as published by the National Bureau of Statistics.
Now, Tajudeen, would you say that that data that was published by the NBS, can we say that that data gives us a picture of both FDIs and FPIs?
Yes, it does, because so if we take a look at it from an FPI and FDI standpoint, I said earlier that FPI was 57% of the total capital that flew in, and FDI, was 39%. If we put it in context in terms of in currency terms, $649 million flew in the first quarter for in form of foreign portfolio investment, while $435 million flew in form of foreign direct investment. But as a country, what we should be doing is to ensure we have a switch of that number. We should look for a scenario where Nigeria will be having more foreign direct investment compared to foreign portfolio investments. When we do that, we will have long-term capital, in the country compared to short-term capital, which is the foreign portfolio investment. Nevertheless, we still need more of the foreign portfolio investment, as well, because they are some sort of support for our foreign currency reserves, and that has been the case, many decades, in the past. And we need to change that narrative if we are looking for, more foreign money that will stay in the country over a significantly long term.
Now, that means even from this data, if I heard you clearly, FPI seems to be more, isn't it? If I
It is
heard you
more,
clearly,
and it has always been
be
more.
more, yeah. Now,
Largely speaking, it's easier to flow in, and at the same time, it also flows out very easily.
so that means that FPIs are more volatile actually than FDIs.
That is very correct. More
Now,
volatile, yeah.
yes. Now, where I'm going to specifically is that the behavioral pattern of FPIs into Nigeria, if you take a look at it, is it detrimental to Nigeria's macroeconomic stability? Because FPIs are normally tagged as hot money as it were. If there are other favorable economic conditions outside Nigeria, those FPIs will go.
Yeah, so I think FPIs naturally will look for global destinations, and the first consideration to my mind is confidence level in such a country, and also confidence level for them in the financial market of such a country. So if we have high confidence, if they have high confidence about our country and also about our financial market, they will come, and they are more likely to stay if they notice that we have the required factors that can make them stay in the country. For instance, we have an efficient and transparent foreign currency market in such a way that when they bring in their capital, they can invest, and when they are willing to go, they can also get their capital out of the market and exit. There will always be inflows and outflows in an environment where confidence level is high, in an environment or in a country where the foreign currency market is transparent and also a lot efficient. So those are some of the key elements that I think foreign investors, as far as foreign portfolio investment is concerned, those are some of the elements they consider. If we now bring it down to our economy, it is positive for the economy, because what it will do is that it will serve as an incentive for more global funds or more global money managers to also want to come and invest when they see rising levels. Second is that it will serve as a provision of liquidity for the central bank to utilize as far as foreign currency demand and supply is concerned. When we have extremely low level of foreign portfolio investment in the country, Nigeria, naturally speaking, will be suffering in terms of liquidity in the foreign currency market. When we have huge level of FPIs, our liquidity in the market naturally is boosted. We have to bear in mind that we do not print foreign currency. We largely depend on what the FPIs, the FDIs bring in, and also other sources. And in particular, we depend largely on our own trade, so the external economy, talking about crude oil and other exported products in this case. So they are very useful in terms of underpinning our economic activities, because they support our foreign currency liquidity. Those that want to import raw materials can get access to foreign currency if we have enough and robust foreign portfolio investment in the country. Those are some of the areas in which they are very useful to Nigeria.
Now, Tajudeen, I've read in and out about talking about FDIs and FPIs over the years, and just like you said, Nigeria, we've had that hot money come in as well as go out. Is there, let me ask you this question, however that question, this my question might sound. Is there a way we can work out like a ratio of balance for FDIs and FPIs in the country? There was a time, for example, in the stock market, I think perhaps until 2 years ago or so, that we saw foreign investors mostly, mostly that's their foreign investors were the largest ratio in the Nigerian equity space. But I think at the time, retail investors, local investors overtook, I think, about 70%. Where I'm really going to is that, is there a way we can balance the act? And if there's a way, what are the things that we need to do to balance the act? Or it's just a free-for-all market? Since we know that FDIs are mostly about ownership and control, as it were, and FPIs it's not really that.
So let us put it in perspective, right? If we look at foreign direct investments that we have in this country, we have a lot of them, for instance, in the telecommunication sector. What South Africa, MTN South Africa has in Nigeria is FDI.
Yeah.
What
Yeah.
Airtel, has in Nigeria is also FDI. What Nestle Global has in Nigeria is also FDI. So those are well-established institutions and companies that run and underpin the overall economy as a whole. When you want to attract, such money that will come into this country and, set up businesses that will be producing goods and services, you need to be sure that you take care of, some key elements that I'm going to list as follows. Number one, the process of, setting up such businesses by foreign investors should be a lot seamless. It should also be simplified. It should not be it should not be uncertain. There should be little or no level of uncertainty when it comes to, those procedures and also the processes of them setting up businesses in Nigeria. The second thing to my mind is around tax holidays or tax incentives, for instance, can be considered to encourage, foreign investors to come into the country and set up real businesses, that will provide, job and also underpin the overall growth of the economy via the product and services that they render. If we also look at, the third element to my mind is ensuring that we have an efficient and transparent, foreign currency market. Because when we have, these businesses setting up in Nigeria, some of them will have to import raw materials from abroad. So when they want to import raw materials, they should be able to have access to, foreign currency that they want to use to, import raw materials for the production of their, goods and services. So that is also a very key element in my view. The fourth element that pops up in my mind is security. To invest in a country may be very easy, but, foreign investors would like to check how secured, is my investment, how secured will my employees be. So those are very important elements, that I think we should also improve upon. If the news flows out there is that Nigeria is not safe, it will be hard to attract investors that will come and set up businesses in this country. The fifth element to my mind is diversification of, such sources of FDIs. And by diversification, I mean Nigeria should look to engage more countries to encourage, both institutions, corporates, as well as the government of such countries to come and invest in Nigeria and set up businesses. And I say this because of what I said earlier. I said Nigeria, attracts, capital from 116 countries as listed by the National Bureau of Statistics. But only five of those
Mm.
countries are very important because they account for 78%. Why not, a little, and then we have, more to other countries. So we need to engage more countries and diversify, that the base of the countries that we currently, get foreign, capital inflows from. So it is very important in my view.
Mm. Okay, Tajudeen, let me say this. What's coming to my mind? Local direct investment. In as much as we want to attract foreign direct investment, we should also take cognizance of local investors, local business people that can do business here, export their goods, and also earn dollars. So I understand what you've said, that the ease of doing business environment has also to be conducive for foreigners. But while it's conducive for foreigners, it can also be conducive for us. Can we also have an environment whereby the Nigerian economy is strengthened in such a way that many players in different sectors can do business, perhaps export their goods and services, and earn foreign currency into the country?
Very good question. I
Yeah.
think, the answer to me, is yes. We can do it. It is something that the country can achieve. If we look at, local companies in this case, what do local companies need? what they need, number one, is that they want certainty and clarity around the taxes that will be payable on their businesses. And they do not want multiple taxation. And this is partly why when President Tinubu put some of the duties and charges that were new on hold. Those are some of the reasons that some manufacturers in the country were very happy about that decision. And I think another thing that we have to bear in mind is infrastructure. We cannot take it away. If we have power, for instance, steadily, you will encourage more local manufacturers of goods and services, particularly those that fall into the category that we call the small, medium, and even micro enterprises. What they need is they require the infrastructure, and power is a very major element of it. If you do not have power steadily for production of goods, what you will rely on are other sources or alternate sources, and that will be you paying more to buy petrol, for instance, or to buy diesel to run your business. So it is very important. All these elements can come at a high cost. I'm talking about power in this case. But if it is steady and predictable, then we'll be talking about an encouragement for the local manufacturers. Another thing that we have to ensure that is efficient is transportation system. Some goods and services are manufactured outside of their state of major consumption, outside major cities, but they have to be transported to the cities. In the process of transportation, there must be safety, number one. Second, the cost must also be low enough for the businesses themselves to bear. So those are some of the encouragements or the incentives or areas that the government can look at and ensure that we have them running efficiently. I so much seem to believe in the new administration in terms of how things can turn out for this country in terms of infrastructure, for instance. And if we look at Nigeria in the next 12 months, the story to my mind should be a lot better compared to where we currently are. And if we take a 4-year look at it, significantly we should see an improvement in the ability of local manufacturers of goods and services to do their business a lot more seamlessly and possibly at a much more cost efficient rate than we currently have.
Okay. Tajudeen, for the next 2 minutes, let me ask you this question because I'm looking at our time and we've got to close. With what you've said that you have, you're seeing a green light from this administration, do you think that Nigeria will now be an investment destination? And do you think that Nigeria is now ready to do business? If you take a look at this report, quite very abysmal that 28 states refused or failed rather to attract funds, capital inflows into their states. So what should be the charge to those state governors that are apart from the FCT, Lagos, Anambra, Ondo, and I think Ondo attracted $200,000, but it's still better than none because some states attracted zero. Then secondly, the question of that local direct investment, which I asked earlier, and you subsequently put the business environment has got to be friendly. Where does it actually also place our foreign exchange reserves? Because if you take a look at least in the last few days, the central bank has come up with different policies, no restriction on the domiciliary accounts, the unification of the naira. You can bring in your dollars. All of you that have stacked dollars under your bed, bring it now and go and deposit in the banks. Where does it leave the naira in the mid to long term? How do we address the FX issues that we're having now?
So let me start from the FX issues.
Yes.
So one thing that I believe Nigerians, should expect, going forward is a gradual improvement in the liquidity of foreign currency in the Nigerian market. We have seen what the CBN has done. I do not want to repeat, what you have said, but what I believe Nigerians should expect is the participation of the independent oil mark companies in the country. As the CBN has said, they should sell their foreign currency to the iron here window directly instead of selling it to the CBN as they previously were doing. So what that implies to my mind is that we are going to see an improvement in liquidity in the foreign currency market. And if you are, as a Nigerian, you are holding your US dollars, I say to you, this is one of the good times for you to sell it because there will be liquidity and the naira most likely is going to appreciate, because what really matters in any market is the ability of the markets to find a balance between supply and demand. Now we have huge demand and the supply is low, but with the IOCs coming into the market, we are going to see an improvement in that regard. The second thing that I think Nigerians should also expect is that the new administration plans to increase the foreign currency reserves to around 50 to 60 billion dollars. What that implies is that over the next 2 to 3 years possibly, or even the next 12 months, Nigeria would need an inflow of around 15 to 20 to 25 billion dollars into the foreign currency reserves. How are we going to get this? My sense is that number one, the country most likely will look to borrow externally for long term to support our liquidity. Number two, we can also consider the issuance of euro bonds. That is not this year, but my mind tells me that it is something that Nigerians should look out for. And if we talk about the local production of goods and services, I say it again, what local producers of goods and services need is infrastructure being put in place. What they need also is for them not to have multiple taxes, and for them to also have the required security. You will not be able to attract foreign investment into your country, not to even talk about local investment, if the country is not safe. So other states where we are not seeing inflows of foreign investment, the governors of such countries should consider securing their state first. After you will ensure, because there are states, for instance, in Nigeria where they say people should sit at home and not go to do their businesses. So would such a state attract foreign investment? That will not happen. So security is a very key element when we are looking at foreign investors coming to invest in any state in the country. And I think apart from security, the state governors can also consider holding events like a conference of investment that will showcase your state to internal investors, the local investors, showcase your state also to external investors, talking about foreign investors in this case. You invite them over, you provide them the required security, let them come and listen to your and the opportunities that exist in your state in
Okay.
terms of investment. This may not materialize in the short term,
Okay.
but in medium to long term, you will be able to attract them to invest in your state. Those are my views.
Very insightful views, Tajudeen. Thank you for joining us. I enjoyed this discussion, at least deep into not just the report, but into FDIs, FPIs, and LDIs and FX issues. So thank you very much for talking with us on the show today. Have a good day. All right, I've been speaking with Tajudeen Ibrahim, who is the Director of Research and Strategy at Chapel Hill, Denham. It's a wrap from us today. Please join us again tomorrow for another edition of the program. I am Nancy Naji. Be the best you can be. A bit of change that you want to see. Bye now.